Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion of global GDP and 10 million jobs. And it's wonderful that today, in the age of AI, lean startups, ultralight startups, solo entrepreneurs, all these categories are getting more and more empowered and enabled with tools. Yesterday, I read a little post on LinkedIn which made my eyes light up. Somebody from Lovable is this Swedish company that does no-code tools. And they're doing a really nice product with no code that's helping people do MVPs very quickly. And some of it is actually revenue generating products really quickly. So this particular post that I read yesterday was about some Brazilian edtech company that has built an app on Lovable that went to 3 million ARR in 48 hours. I was like, wow, that is unbelievable. So, of course, there are questions, right? There's the distinct possibility of an enormous amount of churn. So regardless, though, these are leading indicators of something that is bubbling under the surface right now, that no-code tools are becoming more powerful, and we will be able to, as time goes by, they're going to become more capable, and we are going to be able to do more at a much higher level of abstraction, and we will be able to achieve more with AI and so on. So when I started 1 million by 1 million, that was back in 2010 is when we launched, and we've started doing these roundtables actually even before the 1M1M program was launched in its full form. That was in 2008, and that was the experiment of online mentoring that led us to 1 million by 1 million. Of course, the market was very different. The industry was very different. As you've seen, there is this unicorn mania that goes on all over the industry. But I think we have data now to look at things with more rational eyes. In the last year, 1,200 unicorns exist in the market, and 330 out of 1,200 have lost unicorn status. What does that mean? That means that 330 erstwhile unicorn companies have raised money as a down round. That means it's lower valuation than their original unicorn round, and as a result, they're no longer unicorns. And my forecast is that another 500 companies are going to go that route, because many of these unicorns are extremely overvalued and bloated. So I think the market is actually moving more in the direction of the ultralight startups, really getting bootstrapping first, raise money later, getting to validation, getting to revenue, getting to repeatability. These are concepts that were not really getting any time of day. If you look at when we started 1M1M, these were our concepts. These are the premises, the principles, the philosophy elements with which 1 million by 1 million was founded. But we had a very hard time swimming against the current because the market was so obsessed with venture funding. And now we're seeing the downsides of venture funding too early, trying to blitzscale too early. Last week at the roundtable, I did a segment on why 3-month accelerators don't work so well, and what you need to keep in mind before applying to a 3-month accelerator. All these are important elements of how the market is changing, how the industry is changing, and how you need to process these changes. So we're going to start today's session with a conversation with Julie Castro Abrams, managing partner at How Women Invest. Well, Welcome, Julie. I'm looking forward to getting to know you. We have been connected on LinkedIn, but we haven't really had one of these deep dive conversations. So,
I
welcome.
cannot,
And
I can't tell you how happy I am to be here. I mean, you're so brilliant and so cutting edge, and your analysis over a long period of time just gives me the goosebumps. So happy to
thank
be
you.
here.
So, tell me about how women invest. Tell me, actually, since this is the first time you're here, tell us about your background a little bit and what leads you to how women invest.
Yeah, I actually probably have the most variant background of anybody you probably interview. I come from a justice background. I'm a social worker by training. I have an MBA too, but I don't talk about that. I talk about the fact that I am grounded in social change, and I ended up running. Had a strengths-based approach to poverty alleviation, which is kind of like, okay, you've had all these challenges, but let's redefine who you are. And that redefinition in one of the iterations was running a CDFI, which is a type of a bank, to do work with low income women entrepreneurs in the United States, and worked with over 6,000 women to help them start and grow businesses and fund them. And I did that for like 12 years as a, frankly, as a justice and poverty alleviation strategy. And it really opened my eyes to the opportunities for economic growth and development, but also the challenges in the market. There's structural market problems, especially for women. And so after that, that leadership role, I actually started this huge network of women, almost even opportunistically by accident, whatever you want to say. I'm 57 years old, probably older than a lot of the people listening on this to this, and I'm part of the first generation of huge generation of women like me who have operational expertise and education in vast numbers, and that's contributing to 52% women having 52% of the wealth, which creates a huge market opportunity for us. We're 40 women are 45% of the primary breadwinners in heterosexual households. How can we activate those women who are many of them entrepreneurial and starting their own companies, but also who have the money to invest in us,
Mm-hmm.
in women run companies? And so I'm trying to do, ecosystem and market changing actions, including our venture fund.
Okay. And how is the venture fund structured? Is it a traditional LP GP structure?
It
Yeah.
absolutely is. Yeah, yeah, no question. We have a nonprofit called How Women Lead. And I would say almost all of our investors were touched originally through that network. We place women on corporate boards, et cetera. But that's almost like a backdrop. And our change strategy is how do we move that 2% of all funds going to companies founded by women? And the venture fund is part of that change strategy. It's its own independent, regularly structured venture firm. I am the
Mhm.
general partner on three funds, uh,
Mhm.
an AB fund fully deployed, a seed fund still deploying, and another AB fund that's $100 million. What's unique about us, for one, is we only fund companies founded by women with
Okay.
no male co-founders, no male co-founders. So
Mm.
that 2% number is exactly what we're trying to address. Why?
Okay.
Well, for the justice reasons, but women return 34% more for their investors. You were just giving us a beautiful intro talking about, how the market overvalues, et cetera. That doesn't happen to women for lots of reasons, but it's also, if you think about an ecosystem where women are the investors and women are the entrepreneurs, women don't do that the same thing men do, where they sort of have a contest. They don't, and what you see, like the first wave of AI that's kind of crashed, and cybersecurity and some of the the just these different waves you see of, you'll have a surge and a crash. Well, these VCs, somebody, that's a big player, will say, hey, everybody, come with us, we're investing heavily in this space. All the guys glom on, and then it crashes. And of course, there are probably some early winners, but there's also a lot of market problems and poor financial results as a result. Women are actually, both as investors And certainly for what they're building, they're actually, there's I did a research study and there's plenty of data on this, that women are really risk aware. They're not risk averse, but they're disciplined. They're not going to throw spaghetti at a wall. They're not going to just follow someone because they say, oh, let's all do this together. Like they're going to be like, all right, yeah, but let me do my homework. They will do diligence, and often the guys aren't. And so it's a very different investment strategy and ecosystem disruption, actually, when you look at what's happening now. In 2010, when you started, there were only 12 women run venture funds in the United States. By
Mm-hmm.
2020, there were 300. It's
Mm.
a whole new market. It's a very different thing. And it's matching the growth of women unicorns. There was I think it was 4 or 5 times like an explosion of women unicorns in 2020 from 2019. Like it had, it bounced a little bit, but stayed pretty level. And all of a sudden you got all these women building big companies, leading in the spaces, not just sort of barely there and following. You're really seeing entrepreneurs step out, and you're also seeing, these women with wealth and agency, who are stepping in to invest.
So let me ask you for a bit of we'll dive down into specifics,
Yeah.
but let me ask, in the deal flow that you're seeing, what kinds of businesses are these women building that you are funding?
They're the same
Or
business. They're all the businesses you would expect. It's so funny to me. People are
so
like,
here, there's a
I,
very, let me
yeah,
elaborate on the question
yeah,
before you go.
yeah, yeah,
You can say it's the same, and there's a very good reason why I'm
yeah,
asking you this question.
yeah,
You
yeah.
know, in 1 million by 1 million, we follow the philosophy of bootstrap first, raise money later.
Yes,
Whereas
100%.
if you look at a Y Combinator or a Techstars or most of the pre-seed ecosystem,
Yeah.
there let's just stick with Y Combinator and Techstars. It
Uh-huh.
is a blitzscale from the get-go kind
Oh,
of
yeah.
strategy,
Oh, yeah.
right?
Yes, yes.
So,
But
but
that
these are
doesn't
two
happen to women.
these are two very different strategies.
Totally different. Yes,
Totally
yes.
different strategies. And
Yeah,
my take has always been that, women who complain about bias, I've always advised them, don't worry about the bias, show the goods. bootstrap
exactly.
to
100%.
bootstrap to validation, bootstrap to repeatability, bootstrap
Right,
to revenue, and you will,
right.
I have no doubt that investors are going to
Yeah.
be fine with you, because
Yeah.
you have the goods.
Yeah. Yeah. As long as you have the goods. Okay. So, well, let me give you the framework, and I can tell you, you and I are very aligned. Just have a different frame from how we're approaching it.
Sure.
So what I know and I see is I've got 75% of my portfolio is either agentic AI or AI as a critical strategy in the last year. Before that, it was less, of course. It's sort of, that's what we've seen in the market largely. I've also got, I have a therapeutic, I have a diagnostic, I have a couple CPG. It's pretty diverse group, but these are extraordinary companies that are, but they like you just explained very beautifully. The trajectory of their growth is so different, and what happens, and you also look, like, if you look at the last 3 years, it's been a tough time that we're having this conversation in June of 2025. So the last 3 years, you actually, in 2022 in about April, there was a market crash and you started to see this slowdown. So I'll give you an example, like, of a company that uses biofuels to create the cathodes in lithium batteries in a waterless process. Unbelievably valuable and important, expensive, big infrastructure, long term to grow. All right. The guys that were her competitors that were behind her in the development cycle got $20 million in 2022, and she got 3.5. And so they scaled up, and they assumed and expected they were going to get another round of funding in the next generally you're like, okay, 12 to 18 months, maybe 24, but you're getting another infusion of investment. Almost all those guys went out of business because the market was down. There was not liquidity. People weren't investing. And she's like the only one standing in many ways. Like, she is it. And
This
so,
is often the case. That's
yeah,
why overfunding kills a lot of companies, and then the
right.
ones who are disciplined and doing it more fundamentals driven end up being the
Exactly.
winners.
Which is really what happens with women. And so women return 34% more for their investors because they're more capital efficient and performance driven. They're disciplined. They don't, you could say we don't have the luxury of being those, just how you described it, that sort of like blitz growth. It doesn't really happen for women very often.
And
And
maybe that's a blessing.
yeah, well, this is the thing. I just want everybody to lean into a cultural framework. Men, and you all know this, you've experienced it in your lives, men are hired, promoted, and invested in for their potential. Women are hired, promoted, and invested in for what they've done. That's why, and we do all this blaming women silliness, and trying to coach women on behaviors where, I'm sure you've heard before where people say, oh, well, you know, women don't apply for the job unless they have all the qualifications. You want to know why? Because that's what the culture told us, and we know I mean, that's what one does. And so I think that it's so important for us to stop blaming women and understand these are cultural frameworks that we have learned. Sometimes we can unlearn them and overcome some of our potentially own ultimate limitations, but the truth is the market is telling us, and we know this for how people evaluate venture investments. The guys are asked promotion questions. How big can this get? The women are asked prevention questions. How are you going to risk manage? Have you already done this? Are you going to have a baby? Like all this dumb stuff we've all heard about and we all see. It is actually it's connected to this cultural framework. How do you undo a cultural framework like that? You have to reduce bias in the investment process. You got like there's stuff we already know from hiring and other things to try and reduce some of that. Somewhere in between the guy with the big potential and the woman with great experience, somewhere in between is who we really should hire, invest, and promote in. you know but right now this sort of binary thing is, it's not good for the economy, for jobs, for innovation, certainly not for women. It's not
So
even great for the guys. We're pushing them out into stuff they're not ready for
I'm
even.
gonna I'm gonna tell you something very encouraging that I think is the market is moving in this direction. Just like I said right at the onset that, when 1 million by 1 million started, we had this philosophy of bootstrap first, raise money later, and the market was chasing financing all the time out of the gate, chasing unicorns and so forth. And now not only is the market coming in our direction based on what you just said, the market is actually coming in the direction of that more deliberate business building. If you look at pre-seed investors these days, even the pre-seed investors want revenue generating companies. So they are looking at what's happening in AI, they're looking at what's happening in no code, and they are looking at all these trends, and they are salivating over these ultralight
Yeah.
startups that are growing really fast.
Yeah.
Companies
Yep.
like Midjourney, 12 people company, $200 million in ARR. These are the companies they're salivating over. And, this I think falls very well in the sweet spot of the women that you're talking about, people who really want to do important things and fundamental driven things, right?
Yes.
For us, entrepreneurship equals customers, revenues, and profits. Financing and exit are optional. And as long as we follow that principle, I think there will be hundreds and thousands and millions of women who can build very interesting businesses.
Well, it's kind of interesting. We have everybody sort of like, close your eyes and think what your picture is of the entrepreneur, right? Well, the data is starting to tell us that picture that I bet is in your mind is not actually the right picture. The people who are going to be the most successful are 50-year-olds. I don't know if you guys know that. People who have a lot of experience in business, knowing how to lead teams, knowing innovation cycles, knowing how to scale and grow and do finance and manage a board and manage investors. Building a company is nothing to sneeze at. I mean, you got to know a lot of stuff. And you also have to be smart enough to know who to bring on your team and what you don't know, because no one can know it all. And it's really hard to do that when you're 25 years old. And it's like 25-year-old guy with a hoodie. honestly, there's so many other factors that are trying to help him grow that company that we think we know about. The successful people are the 50-year-olds in the data right now. So if you think about the market and what has happened over the last, let's call it 30 years, right? 30 years ago, you started to have a generation of women who went to college, who delayed fertility and having families, who were the primary breadwinners. All of a sudden, they all have money. And a lot of women get into this moment in their mid 40s. It's called middlescence, where you look up and you're like, all right, I've scaled my career enough. I've done whatever I was going to do with family. And right now, I need to do something that aligns with my values, with my passion. I want to make an impact and do something in the world. And people start starting businesses. I'm seeing it all over the place. So
Good.
it's just
Great.
if you step back and look at the cycle of ecosystem and growth in the country and the world, we're actually at a very interesting, game-changing moment that maybe that's why why there's tanks going down the streets around big cities in the country today, because people are worried about us, stepping into power. If we got
So
the
I will
money,
push back
yeah.
on one thing. It's
Uh-huh.
great that more 50-year-olds are starting companies and with all their experience bringing all that to the startup business. That's fantastic. Even the 25-year-olds, whether it's men or women, this ultralight startup trend is very real. People are putting a product out there, product-led growth. They're getting to revenue very quickly. They don't really need to know how to manage a big organization and all of that. And that's also going really well. So I think in many ways, this is a very exciting time for the startup industry because a lot of vectors, a lot of cylinders are firing well, right?
Yes.
The women's movement in the startup ecosystem is firing very well right now.
Yes.
The AI movement is firing very well, and
Yes.
they're reinforcing each other. So
Yeah.
this is a good time for, especially for bootstrap startups. And I'm
Yes.
I'm hoping that this unicorn mania is going to temper down, and there are no exits, right? The
Yeah.
market has no exits right now. There's no
Yes.
public, very little public market activity. So all these hyper bloated unicorns are sitting there and
Yeah.
doing, God knows what.
Yeah.
So this is actually a good time for the kind of worldview that we share, which is, build businesses with deliberate thought and fundamentals orientation. And that is completely the philosophy of what you are talking about. That is the philosophy
Yeah.
of 1 million by 1
Yeah.
million. Julie, why don't we do a couple of examples of companies that you're really proud of and things that highlight some of the things that you want to highlight about how women invest?
Yeah. Well, I can tell you, as a firm, our first fund we kicked off in 2020. And this is the thing, I have almost all individual investors. I have 600 individual investors. And
Wonderful.
the majority, 97%, are first-time investors that are women.
Okay.
I've got a couple guys, I've got a couple VCs that are friends of mine, but mostly these are first-time investors, and I'm introducing them to investing. So in 2020, everyone finally found the paper towels, and we were staying at home and we needed to do something bigger than ourselves. In 2 months, I raised $10 million. Not a big fund, but a proof of concept fund, right?
Yeah.
I started finding companies. I made investments over the first 3.5 years, and we've sold 3 companies in 4.5 years at good multiples and
Tell me about
return
those.
capital.
Tell
And
me about
return
those
capital
companies.
to our investors. Nobody in the market's doing that. And so I'm saying this because I want you to understand, we discount and don't understand the extraordinary value of both women founders, but also when you prop them up with network access. Like, in so many ways, the biggest issue is people don't have access to network. So I'll give you an example of one of these companies. And this is for the founders here. Hang on, listen till the end of the story. Okay. So there was a woman who is a chief human resource officer at a public company. So if you've worked in industry, you got big budgets, you pay big salaries, you got big structural systems. A lot of people get reinforced from moving paper from one side of the desk to the other, figuratively. And she, in her firm, they created an innovation that's great. And and the firm was like, we're not going to keep investing in this. She's like, well, can I take it and run with it, and I'll go be the I'll leave my job and I'm going to be the CEO. Just give me all the IP. So when I met her, I was like, wow, this is a fantastic deal, because the product is actually really well developed for a brand new startup. And so we got in and invested, but pretty quickly realized, oh dear, this person has a different lens of how to run this company. There's no way this is bootstrapping startup like you're talking about. She was making decisions that a public company CHRO would make. She was on a boards of a public company. And so the lead investor and I had a conversation. It was like, all right, well, we're going to need to bring someone who knows how to build a startup, and we need to address some of these budget problems. Like, you can't pay a CTO and a CFO that much money. And so I brought in one of our LPs, actually, who had been in a bunch of startups, to be the COO. 6 months later, it was pretty obvious that the person was struggling to listen, and there's too much friction, and we weren't making enough progress. So I worked with my team, helped secure a major $10 million opportunity for a client. This person became the CEO of the company, and we moved the original CEO out of that role. I can't remember what we called her. Maybe she became the chair or mayor. I don't know, some word, but just for 6 months so we could get it to a sale, because we needed to exit this company because the leadership wasn't going to be able to lead it. And we sold it for over 2.5 times in just 18 months, which is a
Very
fantastic,
good. Excellent.
fantastic internal rate of
Excellent.
return if anyone knows venture. So the founder made $22 million. The woman we removed from her seat as the CEO made $22 million. This set her off in a whole nother life path. And I share that because I think it's so important for people to really understand, like, the different elements of how you, as a VC, how you work with a company, how you help you help it with enterprise introductions, you help them with thinking through, like, should we sell now, should we grow? Like, there's all these elements that you have to be thinking about, and having a group of people in my back pocket to step in as the CEO, or to bring clients, or etc. All of these are really critical and important elements of being a good VC.
Yeah, very
Uh,
cool. Very cool. That's that point that you just made is something that I'm making a lot. You must be seeing this in my LinkedIn feed, is that small exits is the bread and butter of venture,
yeah. Well,
you
we've had
know?
3 over 2 times, between 2 and 3 times. That's really freaking good in the first 4
Oh,
years
two
of a
and three
fund.
times is
Yeah.
great. What I'm
Yeah.
saying is that
Yeah.
the
And we haven't
96%
lost
of the
any. Yeah.
96% of the exits in venture are sub $100 million
Yeah.
exits.
Yeah.
So this obsession about unicorn and billion-dollar valuation and
Yeah.
billion-dollar exit needs to stop. It's
Yes.
just confusing
Yes.
entrepreneurs.
Yes.
Yeah.
Yep. Well,
Okay. Well,
and it also, like, by doing that, what you're saying is you're not going to help that company that we helped sell, because it's not a unicorn. But in fact, we made good money on that, right? But
well,
I had to take a
okay.
lot of my time to help problem solve, deal with the emotions, bring in bring in an enterprise client that's significant, like really help that company
Yeah. Well, and especially for a
reset.
small $10 million fund, this kind of exit's perfect.
Yeah. Yeah. And I'll tell you, our first time investors are really happy. And now they're like, oh, venture actually works. What you said worked. We're not even close to the harvesting period, and they're already making money.
Yeah. How many deals do you see in a year?
I'll probably see about 600, I think. And we will make maybe 1 to 2% of the investments we see. I'm investing from 2 different funds right now. I'm investing from a seed fund and an AB fund. So I should make 6 seed investments this year, between 250 and 500. I could make as low as 100, but probably not in this life cycle of the fund. We're getting too advanced. in the time frame of that fund. And then in my third fund, we'll invest up to $5 million in between 1 and 5 with 7 to 9% ownership.
And geographically, you invest all over the US, all over the
All
world?
over
What
the
is it?
US.
All over the
Only the
US.
US. Yeah,
Only
all
the
over the
US.
US. Only the US. You know what? For everybody who's an international company, it's not because we don't love you, but the tax implications start to kill your returns.
But that's okay.
And the
Sure.
growth
You have to
structures
make
become
some
really hard.
constraints. Absolutely.
Yeah. Yeah.
And where are you located?
I'm in the Bay Area.
And the limited partners are all over.
They're all over the country. And I have limited partner, and I travel all the time. So I have boards for a nonprofit, and almost everybody involved on my boards and my nonprofit are investors in my funds. So in New York and Chicago and Minnesota and DC and of course all over California. So
Great. Awesome. Julie, it's been a wonderful conversation. We're coming to the end of the time that we had asked for from you. So you're very welcome to stay on, and we're going to listen to actually a woman entrepreneur, Nikki Cao, next.
fantastic.
So let me move us to that phase of the discussion. But I have, Maureen, I have emails from, messages from Prashant, who's asking, how do I send you my slides to you? Prashant, you need to send your slides to Maureen. So could you please work behind the scenes with Maureen, get the slides over, and we'll figure it out. Let me start working with Nikki, and then we will figure out how to work with you once you get your slides to Maureen. And Funny is asking a question to Julie. Could you please talk about some of the failed ventures and what learnings came out of them? Do you want to take that question, Julie?
Sure. Um, uh, you know, I don't have failures. I have challenges and resets that are struggling. And um, you know, there are market things you can't control. Like I have somebody who created, oh gosh, this woman, she's so lovely. She created this company, and then she had a second baby, which only I'm telling you this because it contributes to part of the story. Then she had a warehouse. She had a flood in her warehouse, ruined all her inventory. And she was in a pivot with her company. And then she had some challenges to her IP. And then what she was creating was a DNI tagging mechanism for 10,000 entrepreneurs. And of course, with everything that's all the anti-DNI stuff in the United States, the entrepreneurs then were like, "Please don't tag me because I don't want to get targeted." And so all of a sudden, the market forces, the environment, the different things, and her having, the little what ended up ultimately being a little postpartum depression, all of it came together, and just like, oh my God, this poor woman. So I personally hired her an executive coach and have done a bunch of stuff to support her. I think she's going to pull out something. She's not going to meet what she originally planned, but you can't blame her. Like that's like that's really challenging. I've also had some founders who um were challenging personalities, and sometimes I'm looking for a personality test. I have somebody who yelled at her investors on a call, and and one of them stormed off on the call. There are weird behaviors that come from women and men. I think less with women often, but this particular person, she just she kind of alienated everybody. You're like, well, how could her clients possibly be if she treats her investors like this? What's she doing to her clients? So, the solution was great, but her behavior, it felt to me a little off in terms of how she was managing not a
So,
little off, big time off.
I'm gonna kind of synthesize a little bit of what she's saying, Funny, for you. You know, just because you're doing a startup doesn't mean you shouldn't be professional, number one. Number two, you have to manage your stress. And if
Yeah,
you
of course.
overburden yourself with stress, you know, this is not, this is coming from a woman. Why would you want to take on everything at once? That is not good life management. It's not it's not good life skill, you know? You have to risk manage. If you want to be successful as an entrepreneur, you have to risk manage. And risk managing means that you have to manage your stress so that you can run a marathon, not a sprint. So,
Well, that is, of course, the case. But I guess I would just point out, like, look at what's happening with the President of the United States right now. I'm sorry, it's not about being political, but this erratic, bullying, bizarre behavior, it's somehow seen as an asset, and he's a deal maker and he's growth. You can get bamboozled by people with their I love strong women. So I get, bamboozled by like a super strong go-getter woman, and then you have this moment where you realize it's toxic. It's actually not good behavior. And I'm not sure that's about managing her stress as much as it is she's probably a
no, I was
narcissist and
talking
got some
more
problems, but
managing
um
stress. I was talking about having a second
yeah.
baby in the middle of doing a startup. This is not very good decision making. I'm sorry.
Oh, I have a bunch of people who've done that successfully. So I would push back a tiny bit on that. I literally had my second child, and I was uh in labor, having calls with people. And I'm not saying anyone should plan to do that, but you can. I think a lot of people, to me, I hate when people think having a baby somehow is a problem, but it can be a contributing factor. If you've got postpartum depression, you have a flood, the world changes in a different direction and your whole strategy no longer works. It's like, it's a lot to take on all at once. But
All right, I think time wise we're out of time for this segment, Julie. Thank you so much. It's
yeah,
uh it's been great. Stress
good.
management is a requirement. It's not optional to do a
Oh,
startup, right?
absolutely.
That's
Well, and I
that's
also want a personality test that tells me if someone's going to go off the rails. A stress management of a normal person's one thing. Someone being kind of a narcissistic, bad behaving human is another.
yeah,
So give me the
something we are getting
personality
very
test,
familiar
somebody.
with right now. Oof. Okay, so we're gonna do Nikki's elevator pitch and discussion around that next. Nikki, if you unmute your line, go ahead. Julie, you're very welcome to stay on and listen and participate. Nikki, your video is dark. I don't know what's going on, but we don't see your face. ，What's going on, Nikki? You can also turn off your video and just talk if that's more convenient. That's fine too.
Okay, how about now? Is that better?
Yeah, go ahead.
Okay, sure. I think it's not about the it's like because I had the blue rail headset, so the voice is not good. Yeah. Hi everybody. My name is Nikki, and thank you very much, Julie, for your excellent speech. I definitely learned a lot, and because today is gonna be a very short elevator pitch, I don't have as much experience as like you guys because I'm still, I would say, a little bit young, although I'm not that young. I'm 35 years old, and I came to Canada when I was 23. So I've been in Canada for the past 12 years. My background is banking. So I've been doing business account manager, commercial account manager, and commercial loans for the past 12 years. So I would say, me personally, I have never been an entrepreneur yet. But my clients, they are all entrepreneurs, and I listen to their stories every single day. I serve roughly about 800 business owners in my district, and I attend a lot of events invited by the Board of Trade and, for example, the trade of different association almost every single week. So I would say, so far I'm just kind of like a sponge absorbing all the energies and ideas of all the brilliant entrepreneurs, and I'm trying to build my own little kingdom in the future. So today is not about a successful story, it's about a dream. Okay.
Okay.
So basically, when I was a student, when I first came to Canada, I went to Niagara College and I started my own organization. It is called Multicultural Arts Center. And what I was doing is that I organize students from my school and school nearby, people who are from different backgrounds, and they love music, they love performance arts, they love dancing, and we go to different occasions and dance for people like youth or seniors, to entertain them, to bring some love, bring some laughter to them. And by doing that, I met a lot of friends. I met a lot of like very successful businessmen, businesswomen, and I learned a lot from them. So I realized that sometimes business itself is very professional and serious, but the format can be something lighthearted, can be something fun, because music has no boundary. Dance has no boundary. Laughter has no boundaries. It can cross different cultures, cross different generations, and different, diversity groups. So I realized this is something like my passion lies in. So I kept my organization since then till now. I registered with the government. I got funding from the government, but the whole time this is just a not-for-profit organization. And I manage that on my spare time, except for my actual job, which is the banker. But I realized that I enjoy so much more, and I am so much more passionate about this is something called not-for-profit organization compared with my actual well-paid job. So actually, I have to be honest, I quit my job during the COVID time because I was so depressed, under pressure. I had 40,000 unread emails and almost like 120 calls per day. And I just couldn't handle that anymore. And I went on long-term disability, and like I got diagnosed with depression. So I left the banking industry, and now I'm fully. I probably won't say fully recovered, but I'm trying my best. And my previous employers, they want me back, but I was telling myself, you know what, Nikki, you are still young. You try different things, okay? Banking, you've done that for 12 years. You can still close your eyes and do that. And what if you try something new? Maybe if your dream and passion lies on music and arts, why don't you just do that and develop that into?
So, Nikki, I think I've listened to you for a while. I have limited time, so I'm going to try to add value based on what I've heard. It sounds
Okay.
like you're still trying to decide what you want to do, and you are trying to figure out if entrepreneurship may be an option for you. Is that correct?
I agree with you, but also disagree, because I'm thinking about that. Because I have a lot of thoughts, but I have already put that into practice because I have registered my company as the not-for-profit organizations in 2020 already. So I do have a company that's a entity already, but I'm just trying to make sure that it's going to be sustainable. Does that make sense to you?
Yes, it does. The only thing is, this is a 1 million by 1 million is for-profit businesses. We don't do not-for-profit.
Yes,
So,
I'm going on that right now. So except for that, I do have another partner who has a for-profit organization that is for I would say e-business. So let me link the bridge. Maybe you feel that's a little bit off. The e-business is basically to serve people like us, students, or like very busy workforce in terms of the purchasing. So let's say Amazon, easy to understand, something like that. Okay, so we have registered a company in 2022 that is for profit. And the reason why I link these two businesses together is because I've been in retail business for a very long time, and I realized how important it is to have the CRM, so to manage your customer expectations and understand what they need. And by doing the not-for-profit organization, I have developed the influence so that I know exactly what
Nikki,
we are.
if you call this an elevator pitch, it's a very bad elevator pitch. An elevator
Okay.
pitch in 1 minute, you need to be able to say what your business is, what you do, who's the customer, what is your offer, and so forth. And if you cannot do that, this is not an elevator pitch. I already listened to you for almost I don't know how long, but it's quite a bit of time. So this is not an elevator pitch. It's not working as an elevator pitch. So I think you should stop now. I'm going to explain how to use 1 million by 1 million, and you can see if 1 million by 1 million is something that you want to use. You
Okay.
want to join, and if you do, then I'll work with you and help you, improve on what you're doing. But at the moment, I think I can't spend more time listening to you because there are many other people who are sending stuff. And what is are we talking about doing a pitch with Prashant, Maureen? Could somebody tell me what's happening here with Prashant? Funny says, thanks, Julie and Sromana. Learning from DNI, monitor the external environment changes impacting the business. Yes, professionalism is key. I am a firm believer in professionalism. I don't like tantrums. I don't like toxicity. I don't like this is narcissistic behavior. I'm like the consummate professional myself, and that's the only thing that I tolerate. If people behave badly, I don't work with them.
Sromana, I'm going to upload Prashant's slide right now, and then I'll bring him into the room.
Sure. Is it going to be in the drop down, Maureen? So folks, you can ask more questions while Maureen is uploading Prashant's slides. I will do Prashant's slides with him now, but while that's being put together, you're very welcome to upload, ask questions in the public chat as well. Okay, Prashant, you can unmute your line and we'll get going. Prashant, are you listening? Can you hear me? Prashant? We need you to unmute your line. Unmute your line and start speaking. I have your slides up. What's going on?
Sorry about this. I was unable to unmute.
All right.
I should have been prepared by now. So thank you for taking the time, Samara. I'll keep it very brief. I'm a physician by trade. I've worked in the healthcare space, both in India as well as US. Used to manage Cardinal Health, which is the Northeast Division, remote patient monitoring for a lot of healthcare clients, about 200 plus. But the current company that we are working with is MedSync AI. We are trying to bring remote patient monitoring for seniors as well as other clients who are within the US where they are unable to get proper access. And we're trying to onboard physicians who can deliver using our AI system. So senior care in the US is a disaster. It's costing lives and as well as millions. 1 in 4 seniors are hospitalized yearly due to preventable conditions. 30% of them are ER visits by seniors, which are avoidable with better monitoring. I've seen real impact of that from a physician side of things as well. And sometimes you do feel helpless and want to help more and bring more value to the care that has been provided as well. When you look at RPMs, there are several in the market, but this one that we are trying to work with is, they typically they do not work well with the legacy systems which are already in place. We are trying to unburden the physician so that it can sync well with the current and existing modules which are in the hospital system. This one is going to be purely senior focused design. It will have easy revenue share for the clinics so they can be onboarded quickly as well. And this reimbursement process that we are working for is going to be smooth. We have already had 2
So
pilot
Prashant,
clinics.
hold on for a second. Let me ask you a
Sure.
question here.
Yeah.
It's not clear at all what is the unique thing that you're doing that will make yours succeed where others have failed. What is can you explain with the use case maybe? What can you do that others cannot do?
I think the easiest way to say is, everyone wants to say that their system is well, but the biggest problem from a physician perspective is they do not have the time. They do not have the, time to spend with the data team to coordinate everything that is coming back to them. What we are trying to do is it's frictionless. When our system is uploaded, it will work in sync with any EHR in the world that is currently in place. That brings a lot of ease when it comes to, so a lot of physicians get tired with all these alerts being fired. They don't know how to address them. There are already systems in place that they don't really use, and it is hard to get prior systems to work with the new systems. What we're doing is frictionless service. We will put in the AI, which will bring in all the data and just churn it out to the physician at the end so that they can take action at the right time.
But you're assuming that the healthcare system has the data and everything organized in a way that AI can work with it.
So we have already implemented these solutions in the UK. It's already been done. What we're trying to do is bring the same system over to the US. So the models have worked really well in the UK. Their system is a little bit different. I have worked in the US and I've set up remote ICU systems for about 100 plus hospitals personally, working with a lot of physicians as well. And as well as the hospital system. And what this one would do is it's really talking well with the existing system.
So
Because
what
there
is
was a
it?
lot
Is it Epic that you've tested with?
We have done it with Epic, we have done it with Cerner, we have done it with other clients as well, and it's working well. You don't have the load that you're feeling that you're extracting the data.
So you
them.
have already built something that is in the market, yes?
Yes, and Carta was the initial folks that had invested in it, the initial round, but we are looking for the next round for an investment from an investment perspective because we think that it's scaling well. We are getting a lot of feedback which is coming from our physicians as well as the clients already in place, and so it is easier. As we scale, I think we are scaling faster than what we already have, and our burn rate is getting higher, to be honest. And we don't know how to curtail that as well because we know that we have already done 2 paid pilot clinics, 1 paid pilot clinic, as well as 7 clinics already there, and then we have uh, the senior care market to be addressed as well, and which is a different entity itself. So every time we add clinics, it is just we don't have enough, I think, runway right now to continue with what we had initially raised, and so we're trying to see if um, with 3 fully ramped up clinics, we had about 15,000 patients and 3 million ARR. So that's another thing. And I think the feedback from, the best thing is how we are differentiating right now is personally, I've been a physician. When I talk to physicians as well, it's easy to do the data transfers. It's easy when the system is already talking to the existing system, which are the legacy system, which is very difficult because they have already created a moat. If you would have worked with Cerner or Epic, they're very difficult to work with, and this is really bringing more value to it. What we're trying to do is, with with this product, we are trying to address the senior care market for them. Our projected ARRs, and I know this is a very engaging slides, but from year 1 for net ARR, about from 200,000 to about No. At least,
These numbers look
yeah. Sorry, go ahead.
kind of hard to believe to me. And I mean, I have not listened to, there's a lot of detail that I need to understand to be able to
Sure thing.
assess how much of this is real and how much of this is your projection.
Mhm.
So
Personally, I have personally onboarded about 4+ clinics in the Midwest. There is one in California. Uh, IPA is going to be onboarded as well pretty soon.
and what are the
And
commercials of those? So you have 5 clinics that are onboarded. What are the commercials? How much revenue are they generating?
I don't want to give you a false number, actually. I think my other partner would have been better off giving the numbers. I'm more on the operational side of things and putting in place the systems where we are opening gates with all the clinics throughout the
So
US.
let's do
you know,
this. Why don't you? I'm going to explain how to use 1 million by 1 million for
sure.
fundraising in just a moment.
Yeah.
You're going to need to involve the people who do know answers to these questions. Otherwise, I wouldn't be able to work with you with limited information and be able to
Yeah.
help you. Okay.
Yeah.
So just be aware of that. That it's important
Yeah.
that your partners are
Sure.
involved. Let me explain to you, all of you, how to use the program, and then you can
Okay.
ask me more questions. All of you can ask more questions. We have time for more questions. But let me just take 5-7 minutes to explain to you the program and how to use it.
Sounds good.
Everything is virtual, so you can use it from anywhere in the world. Go to 1Mby1M.com and you will be able to access the entire roster of resources. So the full acceleration program that includes this kind of strategy consulting in private roundtables, premium members only roundtables, where we do the bulk of the strategy work and the iteration work. There is a curriculum that is extensive, and we use that curriculum to teach you pedagogy. So for example, there's this terminology that you're going to encounter if you start working with me called bottom-up TAM analysis. If I asked you, Prashant, can you give me what is the bottom-up TAM analysis? You can't, because you've been putting out all these top-down numbers, which don't really matter. We need you to get to the bottom-up TAM analysis, but to get to the bottom-up TAM analysis, there's a whole bunch of things that need to happen first. So for the easiest way for me to teach you the pedagogy of bottom-up TAM analysis is through the curriculum. So you come into the program, you go do the bottom-up TAM analysis module, and this is what I do often in roundtables, is that I was like, okay, we need to figure out this, you go do this modules in the curriculum and come back next week and we'll iterate on those and then etc. So that's how it's curriculum and coaching in the roundtables is how we work. And then once I deem you ready to go talk to investors, I will make the introductions to investors. We work with many, many hundred investors, and there is this notion of investor entrepreneur fit that we have to keep in mind. So all of that is part of the premium program. The premium program is $1,000 annual membership fee. There is no notion of graduation. You can continue in the program. We've had very successful entrepreneurs be in the program for 3 years. Our biggest success is a company called Freshworks. The entrepreneur was in the program for 3 years. So you can use the program for as long as you want to. Some of you may start with basic, which is our curriculum only option. That's $99 a month. That's fine. You will be able to do the curriculum on your own and address some of the issues. You will not be able to access the mentoring or the investor introductions. So go to the website, look at what to expect from basic, what to expect from premium, decide what is your best path. Some people ask for one-on-one consulting. Yes, we have one-on-one consulting. It's just a lot more expensive. So as far as the free roundtables are concerned, if you are in the room and you're planning to pitch at a free roundtable in one of the upcoming sessions, all summer long, almost every Thursday morning, we have free roundtables, 2 more in June, 5 in July. So there's lots of free roundtables coming up, and you can book a slot. Go to the website and register to pitch or attend if you just want to listen. You can listen as many times as you want. You can pitch in the free roundtables just once. In the premium roundtables, you can pitch as many times as you want if you're a premium member. If you have questions about the program, Irina Patterson is your contact, irina@1Mby1M.com. So if you have questions, I can take more questions. If you want to talk to me, just let Maureen know, and she can also put you on the panel. Funny is asking, in premium membership, how often do we get to meet one-on-one? You don't meet one-on-one. It's the same format as this one. It's a roundtable, but it's a members-only roundtable. But just like I was working with Prashant right now, I will be working on each of your projects in this basis. I was talking to Nikki, I was talking to Prashant, the same format, but it's not a one-on-one private session. It's a one-on-one project discussion, but it's not a one-on-one private session. The one-on-one private session is scheduled at your convenience and my convenience, and that's $1,000 an hour. Anybody else? Any other question? Yes, no?
Would you,
Funny again?
Samara,
Yes.
would you need additional data points, additional information when it comes to the breakdown of how the revenue stream is and stuff like that? I mean,
I'll
because
need everything. Your pitch deck is not ready to go to investors. I'm going to coach you on how to get it ready for investors.
Sounds good.
And for that, I recommend that you involve your CEO so that, we have a complete picture and numbers and everything.
Sounds good. Thank you.
Funny's question is, how often is the group roundtable? It happens every week, normally Wednesday morning Pacific time. Same 8 to 9:30 a.m. Pacific time. There, Maureen has already asked Funny's question. Funny, do you want to be on the panel so you can ask questions or discuss something with me? Maureen can put you on the panel. Let us know. Okay, Maureen, could you put Funny on the panel so you can talk through the audio? There you go. Unmute your line, Funny. You can talk.
Thank you so much. Can you hear me?
Yes, I can hear you fine.
Okay, great, Hesham. I mean, very engaging and great learning for me. So, a few
Where
questions.
are you dialing from?
I'm dialing from Hyderabad in India.
Okay.
Okay. So I think I'm planning to pitch next week about my idea in the startup.
Okay.
So that is it, but I want to learn more about your premium membership.
Okay.
So, the idea is for every founder that you're supporting to get 1 million in revenue, right?
And beyond, 1 million and beyond in revenue. We have companies from the program that have had $10 billion plus IPOs. So there's no limit to how big a company you can build, but no one can become $10 million or $100 million company without first becoming $1 million company. And if you can get to $1 million, you are less susceptible to going out of business or failing because you have addressed some of the most critical points, vulnerability points. So that's why we emphasize on that 1 million point.
Sure, absolutely. And I hope and I believe that you take us beyond 1 million. You talked about Freshworks. That's an awesome, and congratulations to you.
Thank you
for making such a great success. So my question is primarily in the induction program. So do you validate if the idea is actually worth generating 1 million before you accept us in?
No, we don't validate anything. You can come into the program, but be prepared that I may, in the course of the work that you're going to be doing with us, you could invalidate your idea also. We will be teaching you the methodology of how to validate, and you're going to go and do stuff that we're going to teach you to do. But in that process of doing that, your idea could come back as a no-go. You know, some ideas do come back as no-go. And our philosophy there is to fail fast. You know, if you, we don't really want you to spend invaluable years of your life pursuing something that doesn't really work, you know, doesn't have market appetite. So that's something that we emphasize, and you're going to need to, you know, follow the methodology to do validation right. And to do good validation work, you need to do positioning work well. There are pivots that we need to sometimes consider, and we will work with you with all of that.
Okay, great, thanks. And next question, does the company has to be registered in US or any geography, or can anywhere in the
we're
world?
global. It can be anywhere. It can be anywhere.
Okay, awesome. And I mean, you already mentioned that you help with the investors at the right point, like after we go through the course that you offer, and then we take into the investment range. Do you also help with some sort of customer acquisition?
It depends. It really depends on who your customer is, and if I have contacts in that customer base, I can make direct introductions. That is not a problem. But you know, I don't have customers in every segment in that every entrepreneur is going after. So there is also other ways that we you know, help you with sometimes, and we have done this for entrepreneurs. They will come up with the list of target customers, and if I can contact these customers, sometimes they respond better to me than to the entrepreneur because I'm, you know, I have a big name in the industry. So I'm happy to do some of that as well.
Okay, yeah, great, thanks. So our idea is in the sports tech space.
Okay.
Is that space that you already worked with, or you have a previous?
We have done sports tech, yeah. We've done Cricket Club. That's the one that comes to my mind off the top of my head. Yes, we can do sports tech, no problem.
Okay, great. Right, thank you. That's all. And I look forward to giving my pitch next week.
Okay, very good.
Thank you.
Anybody else? Any other question? All right, folks, I don't see any more hands up, so I'm going to adjourn the session, and we'll see you next week. Bye, everybody.
Thank you, Shamara. Thank you.